Hi there, it's Bill with Smart Trades, and it's Friday, January 28th, around 11:10 a.m. Pacific Time. And wanted to start off today with a review of a chart that I originally posted here on my channel back on January 5th. And at that time, we noted a target for the Dow at 12,020. We also had a target date of January 5th, which obviously didn't work out, and we noted that on that date because that was indeed the target date. Uh, Nonetheless, we did hit 12,020.44 in the last couple of days, so that's about a margin of error of 4/1000ths of 1%, and projected almost 3 weeks in advance, or perhaps even more actually. Um, so, indeed, we have hit that 12,020 target almost dead on, and from there we've fallen off a bit. Here is the actual chart from January 5th, and you're welcome to go back and check that out. Here is the Dow chart that I posted for my private clients a few days ago. And at that time, I noted that also that generally we could look at the 12,000 even area, but what we really needed first was a good set of bearish divergences on the advanced decline line. In this case, I'm showing the NYSE advancing issues and projecting out a possible bearish divergence before we peaked. Now here's today's chart. This is not quite up to date. I posted this again for my private clients earlier today, so pardon the fact that it's not quite up to the minute. That said, the key thing I'd like to bring your attention to is the fact that we hit that 12,020 area, again, almost right on the nose, and we did so with bearish divergences. Actually, there were new highs in the last day or so in the NASDAQ, and those divergences were even more profound than they were on the Dow and NYSE. That said, here's the longer term picture on the Dow. Again, not quite up to the minute, showing our potential 5 waves up on the daily chart. Now, assuming that is correct, I would expect at least a correction, assuming the top is in, back to around the 10,900 level. That's the previous fourth wave of one lesser degree. That said, it certainly it could bottom perhaps in a higher zone than that, at that somewhere in that previous fourth wave zone. But the ideal first target is again 10,900 on the Dow. That said, ultimately, I think that we're going to correct, the larger pattern going all the way back to the 2009 lows. But one step at a time as always. And the first step is to get through this trend line. So far the Dow is still holding on to its trend line, even though the NASDAQ and the S&P have broken through a bit. So ideally what we're going to see here is some kind of corrective rally. Again, this chart is dated. We've gone lower than this already. We're currently on the futures down around 1276. And that said, though, this is just a generalized idea of what to expect, and some kind of bounce back perhaps to this trend line, maybe back to 1290 on the S&P, 1295, 1285. Hard to say at this point. I'm not even sure we've bottomed in this particular pulse down. And indeed, these kinds of runaway markets can be difficult to trade because sometimes they just don't bounce. We shall see. The breadth ratios are really awful here. We've got confirmation from Google and so on and so forth. So I do think that probably a top is in. The key thing, obviously, are these recent highs. We do not want to go back through 12,020 on the Dow, back above 1303 on the S&P cash. And here's the NASDAQ, very sharp divergence on that and a very sharp decline out of a wedge. And that high comes in, I believe, around 2334 or so on the cash. I'd have to recheck that, to be honest, but the bottom line is we do not want to see new highs, obviously, if this top is in. Also, we want to see relatively weak rallies back up. that have a corrective style pattern. So anyway, we'll see. Once again, for my private clients, I had done some analysis on the bonds and had looked at the TLT possibly testing the bottom of this wedge. That hasn't happened yet. That said, it's possible that that the bonds have already put in a bottom. I want to see the bonds either way hold the 90 area, give or take a big point. In other words, the 89 to 91 area would be the target range. Ideally, we want to see it come down and perhaps test the bottom of this wedge one more time. That may or may not happen, though, and these types of wedge patterns tend to be quite bullish when they're finally broken out of. So I think it is worth noting here that the bond market may be ready for a bit of a rally. Okay, one thing I'd like to bring your attention to, this is a daily crude oil chart, and as many of you know, I've been looking at the top of this channel as a place to sell into crude, and these red arrows up here are interesting. These are the dates that on CNBC oil company CEOs came out and projected in two different instances that crude oil was going to go to $150 a barrel. What's interesting is the very next day, crude oil in each case put in a short-term peak. I believe this is December 23rd, and then this is January 11th. And indeed, the top of the in the crude futures occurred just one day later after this January 11th statement. So the point of this is be very wary of the news. Oftentimes you'll have people with an axe to grind come on and say something which may or may not be true, obviously. And you have to consider the timing of these statements and you know what's in it for the powers that be in the crude oil market to come out and say that crude's going to $150 a barrel, when in fact, obviously, they've come out and sold the market. That said, we recently hit the bottom of the trend channel, and from there we are bouncing on the news from Egypt. So what I would prefer to do rather than play the news is, you know, in fact, you can actually use the news to your advantage sometimes to go counter trend, because more often than not, if somebody is coming out and making an outrageous statement like that, it's because they have you know, an agenda of their own. And again, here we are at the bottom of the channel and bouncing. So these are the places you want to look to buy. The places up near the top of a channel like this are the places you want to look to sell, and you don't want to worry too much about what the CEOs of major oil companies are saying on CNBC. Let's just back up one bit here. That said, you know, I personally think that there is the potential that we could have some kind of crisis with crude oil. Certainly, crude oil could go much, much higher than the top of this channel. Nonetheless, you know, for now, let's play the technicals, and always I want to play the technicals. One sign that we are going a lot higher than this 92, 93, 94 area at the top of this channel would be a breakout and you know, basically rearranging this channel. But so far it just hasn't happened, and again, you know, more often than not we hit the top of the channel and we sell off, or at least we pause. So take it for what it's worth. Also, in the last couple of reports, I did mention possible targets for the euro. And the upper target was 137.40. I believe the top is just above 137.50. So we have pretty much a hit there too. I believe that this is probably a near-term top for the euro. That said, just as is the case with the stock market, watch this that peak. If we take that out in any significant way, I'm probably wrong. But for now, it looks like all the markets are basically turning together, and time will tell. But you know, from here, I'd look for corrective rallies in the euro, corrective rallies in the stock market to sell into. As always, this is for informational and educational purposes only. Hopefully, you guys had a great week, and looking forward to a great weekend ahead. Thank you so much for watching. Bye-bye.